The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
For Tiger Technicians Hour, my pleasure to be here Monday through Friday, market days at TFNN at 11 o'clock till noon, and the number is 877-927-6648. Great shows all the way through today, and of course you also had Tom's update at 10 o'clock. We are just filling in here, getting full hours, a lot of information that you can get right here at TFNN. Dow is up 35 at 80,116. S&P's up 2 at 2119. Comp Index is up 5 at 5,097. This is going to be very important. Gold had a lousy day on Friday, and today it's up 26. So this kind of volatility, usually when we talk about volatility, we mean downside volatility. Nobody ever talks about upside volatility. However, now we're starting to see this choppiness become somewhat of an issue, in that it is emphasizing either divergences between indices or, and this was very interesting because Friday the dollar was weak and gold was weak. All of a sudden today what you've got is the dollar is trading right now at 96.87. Let me see if 96.87, down a little bit. And here's the pattern that I drew the other day, and I spoke about it. Remember, we're all about patterns here. And this pattern says, the dollar can come down in this double U formation, two lowercase u's. Just as you get the lowercase h when you come down sharply and then bounce, which can become a lowercase m. So in this particular instance, it's the opposite. It's an inverted lowercase y that you're looking at, and then that y becomes an extension that looks like two U formations, and lowercase m upside down. All right. Now, what's really important about this is we're starting to see the divergence that I've been talking about in all the different sectors. We are seeing certain stocks become leaders and a lot of other stocks start to fail. In fact, the leadership now is probably the softest we've seen in a very long time. So with that kind of framework, I want to do a couple of things here. Let me just finish up by saying crude oil is down a little bit. The bonds are down to 10, 30 seconds at 162.08. We've got the euro trying to rally here. Most importantly, we're starting to see the sectors that I've spoken about for quite some time, for instance, XLV, which is the healthcare, start to fail in the pattern that usually occurs at a B or a C. If it's a big retracement failure mode, and that says that if the XLV, the select, this is called the S&P Select Healthcare Spider Fund, trading at 74.02 XLV, down 37 cents, is producing this pattern that I always talk about that says you make a spike to the upside. In this case, we're going to call it G. It was a rogue wave, an isolated move didn't see the sign at the beach saying high tide at noon. And at 12:06, there was this big spike to the upside. Comes down very sharply from 76 down to 71, bounces to the 74s, and is trading right now just about to take out the 74 9-period exponential moving average support, and that's going to be a big negative. So we're going to be watching this very closely. Most importantly, you've got the IBB sector that we've been looking at as a short for quite some time. Had shorts in and out. Now we are short, and in fact the IBB right now is at 356.97, down almost 7 points from that C. And I already drew this in for subscribers. Been giving them a very detailed account of this. Look at the 120-minute. Went to a peak D at 368.25. That was on the 23rd of April, and so far it's starting to fail. This is going to be very, very important. Why? Because the monthly hasn't even acknowledged that anything's happening other than good but the weekly is saying the MACD has started to turn down. The slow stochastic is making a potential H pattern, lowercase h pattern, as it's gone to 74.56. This is the lowest it's been in quite some time, regardless of how high the weekly chart has gone, and that's a divergence, and that's a negative. So I'm looking at this and I'm saying there are a number of stocks that in the highlights that you will see in CNBC or in your local newspaper, stocks that are moving higher, have been outstanding. Remember on Friday I said, we've got so many. Am I going to remember now what stocks there were on Friday? Wait, Amazon was before that. No, Amazon was on Friday. Amazon gaps up. I said, leg F to the upside on a Friday, huge gap. Makes me kind of nervous, but the weekly is still in leg C, so that's good. Monthly, I have no idea. It's F/B so far. It's a breakout, and that's the monthly. We have to wait until the end of the month. But this is going to be very important because it opened at 439 round number. It had a low that was also the open also turned out to be the low number. So there's 439 round numbers on the same day, and then it pops up to 452.65. I'm watching this really closely. Good news, it should translate into higher highs, but the market itself is starting to become overbought in many of the areas that I look at. I'm waiting for the QQQ series, leg C, to make a leg D, and then we'll make some decision. At this particular point, that is the strongest index. But look at the IWM. IWM just has not been able to hold that leg that went to a peak F/B and a G/C, F/B. It's a whole bunch of things going on that was last week. And as a result, I'm just trying to get rid of this. At 127.13, we're going to watch that closely today. It went right up to 126.91. And it failed to make the little extra juice to get to the 127.14 to break out. So this is going to be a leg, a peak F/B in the weekly chart. So far, the MACD is good. The stochastic is also good. It's going to be the daily that drags it down. If by Wednesday or Thursday, the daily is below 124.47, because the next cushion is going to be the whole area of 123.80s. So this is going to be a very important week as far as I'm concerned. What else came out Friday that spiked to the upside? And I said, I don't like Friday gap ups to leg D, E, or F. Well, I can't remember. So sorry about that. There were a number. Doesn't matter. What's important is that the 120-minute chart of the IWM has gone to ABC. This is leg D. Now, it's very interesting that we're getting all these Ds and Es at this particular point, and I'll explain why. Tomorrow night, here at TFNN, I have my first of my two free webinars, 45 minutes, open only to subscribers. It's educational and it says entertaining trading and training webinar. This particular one is going to go through what I've already prepared it, and what I've been looking at is what happens to patterns when they make that cup formation or the arch formation, or when you get a left side, right side price time match. But most importantly, I'm going to show you the techniques, and then I'm going to go straight into templating them on what we're in right now. And that's why I'm saying this is such an important period for three reasons. The first is it's important because right now I'm getting leg E in the S&P. I'm getting those legs that are very important in the daily charts. The weekly charts have all, except for the diamonds, confirmed at least a leg D up. So we are ready for any kind of pullback. At the same time, we've got to be able to understand what the residual strength can do and how it can help the market maintain this upward momentum just a little bit longer. I don't know if it can, That's why I said to my subscribers, to my opening call, my section that's called Overview on Market Today, I said I'm anticipating a mixed close, even though the futures are higher this morning. And we were up 90-something points in the Dow. S&P was up 8 or 9. And now the S&P is only up 2 and the Dow's only up 38. This is a very important period. So now what you can see on the front page, we've got a two-part webinar. The second one will be a week from Tuesday, May the 5th. And that one includes a revisit to the webinar that I did on the 19th of February called 1929 match between that period and this period. It is unbelievable how many things are being coordinated in such a way that you turn around and say history always repeats. They might be different characters, but the nature of the participants is the same. And so that's 2 free webinars only open to subscribers, but you can still come in, you can join, you can get my newsletter for a month free by coming to the webinar. It's just a real easy process. Check it out. I think that you're going to be educated. I think you're going to find out a bunch of things that are going to be totally what you can focus on. Talk about the VIX in a moment. We're going to do that as well. And then the second one, the follow-up with the overall overview match between the late 1920s and the period we are in is going to be stark. You're going to be shocked at how many similarities there are. Okay. You can also see that Steve Rhodes has a 2-part webinar coming up. This is Psychology of Training, Human Pattern Recognition, 2-part webinar. Check out the front page. I mean, there is so much information right there. All right, enough with this. We get out of that. And what we're going to look at is the IWM has made a potential little double top here. It's going to be very important this week to see what it can do. So when we're looking at the QQQ series in leg C, with a little doji candle possibly forming today, the stochastic at 93, the MACD is still very strong. That's beautiful action. I'm not that happy with the technicals in the weekly chart. Monthly chart is just a thing of beauty, going up to the dashed line resistance area. But this is going to be very important in the QQQ weekly because we are very close within like 2 points, 1.5 points of that red dashed line, which is the resistance, the inside, Chapman wave inside track repellent zone. We're in leg. Possibly it could have recycled. I'm calling it F for now. The 120-minute chart, we could see a sudden pullback and then one spike to the upside by maybe Wednesday or Thursday if tomorrow is weak. And let's look at Apple. What do you think Apple's going to do? We added to the Apple bottom line over the weekend. My wife finally got an Apple. I don't yet have the Apple iPhone. We do have some other Apple gadgets. But this is going to be very interesting. Leg D, a gap up today. We're going to see what happens. Is it going to double top? Is it going to break out? Is it going to pull back? I'll do a little analysis when we get back. Basil Chapman will be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, just before we do anything else, got a couple of questions. One was on RGEN. The question again was, should I take something off? Headquartered here just the town next door, Waltham, Mass, next door to Newton. So, RGEN trading at 33.94, down 81 cents. Made a peak D at 35.47. This is a huge biotech company and is in leg F/B in the weekly, and the monthlies in leg E. Monthly technicals are really outstanding. Stochastics at 84%, MACD is still expanding. But it is extended from the 9-period exponential moving average, which suggests that it's getting closer to some kind of a consolidation. Closer doesn't mean, if you're talking about a monthly chart, doesn't mean next week, doesn't mean tomorrow, it doesn't mean even next month. It means that closer in the bars. Could be 3 bars before it turns around. So we have to look at the weekly. The weekly suggests the MACD is just now fully extended. That doesn't stop the price from going high. It just means that from here, the histogram should start to squeeze. In other words, you start to make smaller bars. above the 0% line, and the stochastics at 83%. And we'll be talking about the MACD and the slow stochastic, and I'll include the 9-period exponential moving average tomorrow night in my webinar. Now, there's a lot to do in the 45 minutes. There'll also be some questions and answers, so I will make it really comprehensive. Since it's archived, you'll be able to play over anything that you don't get, but I do want to go through it so that you've got the nitty-gritties of what I look at every day. So this suggests that the weekly chart is very important, being a Monday, that it pulled back so quickly without taking out Friday's high or last week's high. So that says right here you got to be a little bit careful because it could be a little digestive phase. Aha. Now it says in the daily chart, the second buy mode, beautiful buy mode, going from the previous peak E to a leg D, and it slices through the cup formation in a Chapman wave. I'm going to be talking about this tomorrow, talking about what happens in a cup and ladle, Chapman wave cup and ladle breakout. Well, invariably you go to a D or an E, and then what you do is you pull back and you test the left side lip. In this case, testing would be going from 35.47 to 31.90, 34.15, which it did today. It's at 33.82. So the stochastics at 89% good, but starting to turn down. The on-balance volume did not confirm the rally, and the MACD is way lower now than it was at the previous lower high, the one that was at 34.15 on the 20th of March. So my suggestion is either you take something off right now, or you put in a stop just underneath the 9-period moving average of 33.34. Since it's a long-term buy and hold, I'm suspecting that a 3/4 of a point or a point will make no difference at all in the overall gains. But what will make a difference is if it holds above the stop of just under 33, I'd make it. If it holds above that and starts to rally in the next 2 days and then takes out 35.47 for a potential leg E, just raise your stop and you've got yourself a bonus of about a point or so. That's the best thing. Whatever the case, I would be right now looking at taking profits in some part of my longer term position, my core holding. That's what I'd be recommending. Now, here's the next question. LYD, Lyondell Bazel, I think it is, LYD, LYD. Did I not type that incorrectly? LYB or LYD? LYB. Oh, LYB. There it is, trading at 103.13, up 2.30 in leg E in the daily. Very strong characteristics. The weekly chart is in a retracement mode. It's in leg C, so that can fail at any point, even though you would like to see a leg D. If it's not at all-time highs, there's no guarantee that you'll get to the D. So what you do is you have to watch the shorter term. And then I haven't finished the notation on the monthly, but the monthly looked really good. This is a very strong rebound. And because it's a strong rebound, my suggestion is that there are a couple of things that I would do. So, hi, Basil. I emailed you on last Wednesday, and you said to check back again about this stock. This is the material sector. Do you think this is a possible short? Thanks, Rob. So, two things. For anyone who's long and holding, this is not right now a short at all. I'd have to wait for a couple of things to fall into place. It is extended, but that doesn't mean you couldn't. I can put in a rectangle here and say, hey, you could just be in a high-level consolidation between 103 and 96. However, if you are thinking of shorting the stock, you've got an A, that's A, B, C, D, A, B, C, D, E. Okay, very nice. We've got a break coming up here. It's just a good opportunity for me to do a couple of notations on the 120-minute chart. We'll be right back. Dow's at 49, it's at 360. Basil Chapman, Tiger Ignition down.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Now, this is what I'm looking at. In a 120-minute chart of LYB, LyondellBasell Industries, NV Dutch Netherlands company. This is the A shares. I've got leg E in the 120-minute chart. So the question was, Rob, is this a shorting opportunity? I've got to go to callers. I didn't realize. Okay, my assessment here is if you want a really short-term trade, you know what? I'm going to do this just before we wrap up the day because this is going to be very interesting. I'll explain why, because of the long-legged doji from yesterday. So let me explain it when I got time. I'm going to first go to Suzanne in Canada. Suzanne, how are you?
Good, Basil. How are you?
I'm well, thank you.
I'm studying your methodology system. My son and I bought the video, and we're studying it. And I would like to know what peak we completed and what leg we're in with GDX on
So
a
folks,
daily.
On the daily. Folks, we're looking at GDX, which is the Market Vectors Gold Miners ETF. Now,
Yes.
this is really fascinating because for my subscribers, we had the IAU, which is the 1/10 of the price of the GLD. We got stopped out for a very small gain. And it's just been stuck in this range. It hasn't really done anything. I will reassess tonight whether or not I want to even try to go back in there. But this is what's important. Do you have a peak C on the 16th of April at 20.23?
Yes.
Okay. And what you're looking at right now, and it's so interesting the way chart patterns form. If you know my CD, you know the chapter that I have. It's chapter it's called the Phantom, and it's called the Falling Axe, the one where you got the declining, expanding wedge formation. Chapter 24 starts around about slide 391. Well, up until Friday, it was just making an arch formation. It's still making an arch formation in the larger context. But because of today's action, breaking above, if I join the high bar of the 16th of April at 20.23, the high bar of 21st of April at 20.07, you'll see that on the way down, there were lower lows. So if I join the lower lows, I'm going to make this much bigger so that you can actually see it.
Basil, would it be okay if I hang up and go watch you on the
Yes, sure. Why don't you do
TFNN?
that? Then you'll be able to watch it as I'm doing it, and I'll explain.
Yes. Thank you very
Okay.
much.
Thank you very much for calling. That's Suzanne in Canada, and what we're looking at is GDX. Within the Chapman wave methodology, there's I don't have my CD on. There's a pattern that I call the falling axe. What it is really, I always find that if you give these illusions to something, it's just easier to remember it. But it's really a declining cone. And that declining cone had lower highs and much lower lows. And it comes from the left side, a series of resistance points like that right there. And now what we've got is like an axe. When you take an axe and you're about to chop some wood, you'll see that the axe is at an angle down and that the wedge is at an angle down as well. And that's exactly what you've got here. What's important about today's action, it was a real sudden reaction to something. And if you're looking at the 200-period exponential moving average and the 120-minute, you'll see that we formed like a sine wave. And this is what happens often with the 200-period moving average. You go down and then go up, and you go down, and it's like a magnet. It becomes a propellant for a moment, and then it becomes a magnet. It becomes a repellent, and then it becomes a magnet. And at some point, what you expect is that baseline of the 200-period exponential moving average, you're hoping, if you're bullish, you're hoping that it becomes a support level to trampoline the stock price of whatever you're looking at higher and higher away from the 200-period moving average. And the more you can push away, the less the magnet can bring you back. That's really what you want to do. So this is exactly what's happened here. And I would say that not too much has changed in my thinking, other than you could very well get a leg C if it goes to 20.24, and the high today is already 20.01. So it's not too far away. And then once it does that, what I would say then, now all of a sudden you're looking at something very different. And this is fascinating. The 200-period exponential moving average was tremendous resistance earlier on, back around the 19th, 20th or so of February. You broke out to a peak E and you had a rally, which looked like it could also produce a falling axe formation right there. But instead what it did, it became strong resistance and you couldn't break above it. So that one failed. And you went to lower lows in that H pattern. Now, what we're looking at, you've had time to heal. And it says that if you can close, not you, the GDX can close anywhere into the 20.43, 20.49 area, all of a sudden the 21.10 200-period exponential moving average, this, what did my wife tell me the color was? Coral. The coral, I've always called it this kind of pinky brown or whatever. She said, hey, that's coral. So coral, there it is. The coral 200-period exponential moving average could become a magnet in the daily. We saw it as a magnet in the 120-minute chart. It's trying to break away. So, Suzanne, this is what we're looking at. I'm not sure what position you're in, if you're just doing it as a study. But if you're doing it as a study, two things. You see the black line. This is what I'm going to be talking about in my webinar tomorrow night. How important it is to learn how to use the 9-period exponential moving average. The 9-period moving average has tried to become support, became resistance for a couple of days, back today to support. That's the black line. Let me just get it right there, 19.65. And it says very simply that the further and longer you can push away from the 9-period exponential moving average, the greater the chances of success at turning it into what I call walking the 9 EMA, a support line, a cushion, a staircase. That's a very important ingredient. Now, my concern is the on-balance volume is not following at all. Even volume, if you look at these volume spikes, it's really not really confirming the rally. The MACD is holding beautifully and just deflected from going negative, and that's a positive. But the stochastic, while it's turned positive today, it's down at the 59 area, 59% area. And if you know my CD, that whole section that I have on the slow stochastic and the percentage of the slow moving average, that's the red line over there, that's the one that's very important. Now let's just go to the GDX weekly chart. I see no reason at this particular point to suggest that we aren't just in one of those many arch formations that we've looked at for a while. Let me make this one a little bit more concise. Let's go to the low there and say that we could perhaps have another one. It's not anywhere as strong yet as the previous. So that confirms for me that if the GDX on the daily can get to that level that I was talking about, 20.42, 49, somewhere around there, in the next 2-3 days without failing, that's going to be very important. Why? Because it starts to allow the target in this arch formation to go to the left side peak of importance, which is at 21.48, right there on the week of the 27th of February. Look how many coincidence factors we've got. And look here, the 120-minute chart, fabulous move up. This is leg B, but it mustn't fail like it did before at leg B right there. It's got to hold, and that says that the MACD has to turn positive and hold with the wide beta. That's this area that looks like this when this is the slow-moving average. You want the fast-moving average to push above. That's the way you look at it, and go sharply higher. That'll say that there's strength in the 9-period differential. Yep. And then what you want is, and this is the disappointing thing, the MACD is still only at 39%. It's suggesting this is just another one of those bounces. So that's the analysis. I should have kept you on just long enough to ask you whether you were long or whether you were short or what position you were in. Let's just treat it this way. At this point, you've got the falling X formation. Let me just make it a dashed line so you can get a good picture of it. See that dashed line broken above it? And that says you could get a 1-to-1 expansion, 1-to-1 expansion, which would take you to a new recovery high right there. And that expansion would be from there to, I usually do it from the 9-period moving average, first of all. So that would take you to 20.23. So you look at all the factors that are saying a close above 20.23, positive. A close above 20.42, 49, much more positive, because now you've got yourself a target of the 200-period exponential moving average in the daily chart, which comes in at 21.10, I think I said. Yep, 21.10. I hope that helps you, Suzanne. Any questions you have, please just either email me or call me. You know, I love answering questions about the Chapman wave. A failure, I'm sorry, I didn't add one thing. The 9-period exponential moving average, which it closed on Friday and Wednesday, that's going to be even more important because you're starting to see this alternation between 2 ups and 2 downs. So we want to see that there's a second up now on the green bar, because if it's an inside day and then a weak Wednesday, that period, 19.66 to 1957, that is absolute. 1966 to 19.50 on the GDX is critical short-term support. Now the weekly chart is starting to look a little bit better, even though stochastics only at 38%. The MACD is rallying and the price is rallying. So I think on a shorter term, it is nice action right now in the GDX. Just want to go to the GC right here. Nice candle today. It just obliterated all the negativity of Friday. But once again, it's that weekly chart. I just see H patterns, lowercase h's. Check out the dreaded H chapter. That's the chapter 17, slide 332. That's going to be most important because that's what we've been seeing in the monthly chart of the gold and the GDX and the GLD. So Zidar says GDX in a new bull market as I see it. You could very well be right. I'm not denying that you couldn't be right. I am saying that I must quickly, while we're talking about this, look at the dollar, and the dollar is pulling back. Yeah, the dollar, there's that pattern that I always talk about. So you've got yourself a rectangle formation. You got a potential H pattern within that. That's very important in my work. And it says by this week or next week, if the DXY, the dollar index, is not underneath 95.50, but instead is holding very nicely in the high 96 area, 97 area, that's just a sideways consolidation. If it takes out 95.60 on a close, it says, ha-ha, the dollar is finally taking a longer breather rather than time. It's going to include price. And that's when you should see gold start to rally. All right, those are the conditions where I would be in agreement. So we've looked at that quite intensely. I said I'd look at the VIX index. Now we'll take a little time tomorrow to look at the VIX index. All I can say is that the VIX index is desperately trying to make the 12s. It was trying to make the 1250 support. It broke that. It went to 12.12 on Thursday. Friday, it had a higher low of 12.16, and today the low is 12.33. I'm of the opinion that the VIX index is in one of two characteristic modes right now. The first one, I would have thought is a possibility, and that is it is going down to the 12, 11, even 10 area, and it's going to sustain a move in the market now to higher highs. My second opinion is, and this is the one my bias, is to say that the VIX index is getting ready for a spike in the next couple of weeks, either this week or next week, to spike to the 1505 or higher area. There's going to be a consolidation in the market. I don't know yet how long it's going to start because it's held better than I thought for just a little longer with just slightly higher highs in the S&P and the NYA. Because the Qs are leading, Apple's earnings today and the resultant action in the market, my thinking right now is that Apple might spike a little bit. I don't see a 15% spike in Apple today. I actually see the chance that Apple continues its high-level consolidation because they are really the General Motors of the 2000s, General Motors of the 1920s. That's what they're in. Their functionality, their leadership role, etc. is very important. So I see them not having that much on the downside, maybe sideways consolidation, a big percentage range, but not a massive sell-off just yet. But I am looking at it and saying there's a lot going on with Apple that the consolidation has been telling me about over the last 6 weeks or so, and that if Apple by Friday goes underneath 128 to 127 support, it's going to impact this market in other ways, and that'll include the Dow and the NASDAQ. I'll be back for the final segment. Be right back. Basil Chapman, Tiger Technicians Hour.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Don't forget, Larry comes up straight after me. Should be a great show, as always, with Larry. I'm looking for also, I just got an email. It says, could you look at the TLT if you have time? Appreciate it. Look forward to your webinar. Yeah, don't forget, folks, this is a great opportunity to look at some chart patterns that repeat over and over again. Where are we? Why are some of those major sectors breaking down? Why are some breaking out? What does it mean? What is the relationship? I don't have time to write to at this very second of the U formation. The U formation. I will do it. Look at this. The QQQs right here. Look at this. Look at that. 120.50 was the all-time high back in March of 2000. And the QQs went down to 1976. I'd call that a crash. And it's come all the way back to 110. Can I get to 120.50 without a big consolidation? Very often that's what you see. You go right to the door, and then you have to step back to build the momentum to break out. We're going to talk about that. The comp index is actually a little bit better chart formation. Anyway, LYD was, I said I'd do that just before the end of the show. LYB is the symbol. Lyondell Basel Industrial Company. Leg E, I've got it in the 120 minutes. The question was to short. My answer is that probably by Wednesday, it'll be perfect to know whether or not it is a short-term pullback. But the weekly is still very strong, and the monthly is still good. But it could fail, and that's the reason. The only reason why I want to look at it closely is because that pattern in the monthly, we've seen U formations going back to the top. We've also seen some U formations fail at the right shoulder failure pattern, about 50 to 60% from the bottom. We just saw the IBB do that on the daily, and that it hasn't failed yet, but it looks like it's going to fail. And look at this. LYB is at that point of, this is the moment of truth. The MACD and stochastic and weekly and monthly are very good. I don't want to do anything now. The only thing I would say to you is if you were going to use options, we might talk about something in the option. I don't want to do anything yet other than to say it's within hours of possibly turning down for a little bit, a little brief 120-minute pause. But the actual short position, I'd have to wait on that. Okay, that was that question. Would I look at the TLT? The TLT is trading at 128.73. My contention has been the Fed is stuck, that we're in a mini recession. I don't know if I'm right or wrong. It's just my belief from what I look at. But what's really important is that I think that the yields, I can't go to the yields right now, but I think that the yields are just stuck in this range. So I'm looking at the bonds and the TLT. Unless you're a shorter-term trader, my personal opinion is I've avoided trading the TLT or the bonds because I think they're just stuck in a range. And I'm looking at this and I'm saying we are so close everywhere to look. Gold is just turning around. Dollar could be pulling back. We might be seeing a change in trend. Perfect timing for my webinar on Tuesday night. I'm going to be discussing these things. What are we looking at? Why are we looking at certain things starting to fail here instead of breaking out and building momentum so you see more and more stocks rallying rather than fewer and fewer? My opinion is we've got fewer stocks rallying at this particular point. Okay. So now the next thing is we'll just do this real quickly. I said that the VIX index, let me tell you what I'd be looking at over the next day or so. The VIX index right now is at 12.58. Now it's up 29 cents. The other day when the market was down, it wasn't even up. So this is very interesting because the stochastic is flat and the MACD is improving and the histogram is improving slowly. But it's price is the arbiter of a trend. And until the VIX index starts to trade in the 1360 to the 1430 level and start to hold there, you will not get sustained selling in this market. There are just too many people that have missed out. In fact, I was speaking to friends over the last 2-3 weeks. Anybody even talks about the market has started talking about, I just want to buy the SPY. I'm done with individual stocks. I'm buying the SPY and holding. It's a buy and hold. Wow, that made me nervous. Folks, Larry Pesavento coming up. Go to the front page of TFNN. Sign up for this particular course, the webinar, and I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.